SMT divergence. What is SMT? Why it happens? Types of SMT. And this is a secret no one talks about. The importance of SMT, the strength and weakness of pairs, how to find the reversal points using SMT, how to master turtle soup using SMT, examples to ensure you master SMT. This is what I'll cover in this video. This is a full course and the only video you'll ever need about SMT divergence. If you appreciate my free content, then make sure to hit the like button and subscribe to my channel. Let's get into it. So in order to understand SMT the right way, we need to understand correlation. There are specific pairs that actually tends to move in the same way. It's not exactly the same, especially when looking at the lower time frame, but then when looking at the higher time frame, it's going to be more obvious. So if we're looking at pair 1 and pair 2 and they're correlated, and that's what we're going to actually discuss on the next slide. But if pair 1 is actually making a breaker structure here, then pair 2 is going to make another breaker structure here if it's a real one. So that's how correlation works. There are specific pairs that tends to move the same. Now, in a bullish scenario, when we're making a low here and a higher low, then the other pair usually will do the same, a low and a higher low, and then a breaker structure here, a breaker structure here. That's if the correlation is there, and that's if the order flow is correct here. If this is a valid breaker structure, it's going to happen in both pairs. Now, there are some times where this is not going to be there. The correlation is not going to be there. And here we're only talking about the positive correlation. So two pairs moving the same. It could be the opposite. It could be one pair making a low and a higher low. The other one is making highs on the other hand. And we're going to discover all of this and discuss it in details in the next slide. Now, when talking about the correlation between pairs, we have the big three indices. They are positively correlated: NASDAQ, S&P 500, and the Dow Jones. Those three big ones usually tend to move in the same structure. So especially on the higher time frame, if NQ is making a lower high, then S&P 500 is going to tend to do the same unless we have an SMT, and that's what we're going to discuss in the future or in the next slides. Now, we have positive correlation and we have inverse correlation. But let's talk about the forex pairs. So you can have a lot of correlation between different pairs, but the most two famous ones and the ones that I tend to actually trade the most, we have EU and GU. So the euro dollar and the pound dollar, they're actually positively correlated with each other, but inversely correlated with the dollar index, which is the DXY. When looking at this, for example, EU and DXY, we have EU making a high and then a higher high, while DXY is doing the opposite. It's making a low and a higher low. So that's an inverse correlation. But then you could actually look at it in this way, in a opposite point of view, or you could inverse your DXY chart and you're going to see it the same. Now, when it comes to crypto, we have Bitcoin and Ethereum. They're actually positively correlated with each other. So if Bitcoin is making a lower high, then Ethereum gonna do the same. If we have a clear breaker structure on Ethereum, it's gonna be the same on Bitcoin. So we have two types of correlation. We have inverse correlation and we have a positive correlation. The positive one is the one that when we have two pairs moving the same. The inverse one is when we have the two pairs actually doing the opposite of each other. Now, what is SMT divergence? So SMT is short for smart money technique. So we have smart money technique divergence. Now, what is the SMT? We talked a lot about the correlation, right? SMT is nothing but a crack in correlation. You know, the correlation is not there no more. There is something that is happening that is unusual, right? Especially again, when taking a look at the higher time frame. And that's what we're going to discuss in the examples. Now, an SMT could be bearish or it could be bullish. Taking a look at this one, we have pair 1 and pair 2. So let's say, you know, for instance, we have EU and also GU here, right? So we have EU and GU, a high and a higher here. Now, GU or pair 2 should do the same, right? Most of the time. But then in GU, we have a high and a lower high. So it's nothing. There is no correlation in this case. What is this? That's an SMT. We're going to know why it's crucial. We're going to know how to use it. We're going to know where it happens and where it is that important and when it doesn't really matter. Now, in a bullish scenario, we have EU, for example, sweeping liquidity, while GU not sweeping liquidity and actually respecting the speedy array if there is one here. Or, you know, it's just making a failure swing. It's making a clear trend, while this one is taking liquidity. there is high resistance liquidity run here, while there is a low resistance liquidity run that's going to be in the future here. SMT is nothing but a confluence. So it's not a strategy by itself. It's not a trading plan. It's a confluence. It's something that you look for at the end, right? So let's say you have everything, a point of interest, and prices come in there and you see price going up. Then you look for an SMT in order to confirm, or in order to have another confluence, or in order to make this an A plus setup, right? So it's a confluence and we're going to know when to look for it. Now, when you look at EU and GEO, for example, you're going to see a lot of SMTs. It happens everywhere, but it's not crucial every time. So you could see a lot of SMTs happening everywhere, because especially when we're looking at the lower time frame, right? So there is rules that we need to apply, and there are some spots or some zones that we need to actually look for that SMT in that specific zone, right? And that's what I say. SMT is a confirmation. SMT is a confluence. Now, where to look for the SMT? We only look for SMT in POI whenever we have a fair value gap. Whenever we have an order block, whenever we have a liquidity sweep, we look for the SMT because it's a confirmation, right? But know that SMT can happen anywhere. There could be an SMT here, could be an SMT here. For example, here you see we have a high taken in this first pair, right? And we have this high not taken here. That's an SMT. If you take this SMT, you're not going to get in profits and it's going to hit your stop loss eventually. But if you focus on this POI here and you look for this SMT, low taken, low not taken, that's a bullish SMT. You could have taken this one. You could have also taken this one because this is after price coming into this POI, and most likely there is a fair value gap here after a break of structure. Then you could look for this. But this one is not valid. This one right here. So we only take the SMT at valid point of interest. So not even any fair value gap, but a valid fair value gap. How do you know which fair value gap is valid? I have a bunch of videos about this topic. Now you see a lot of people in YouTube talk about SMT divergence, and they say, oh, it's very important, you gotta look for it. What is it? It's a Kraken correlation. But they're not gonna actually explain why is it important. They cannot, because they don't have the full understanding of SMT. But after all those years, now I do understand why is it crucial. So I'm not here telling you what everyone is telling you. I'm here to give you gems that no one ever tells you about. So we have SMT. Why is it crucial? Now, considering we have pair 1 right here and pair 2 right here, we have price taking this low and price not taking this low here. What does that mean? So taking a low and we have some displacement below it. It's not a big one, but we see that, oh, we have, for example, in the 1 minute time frame, we have 2 big candles going lower and closing. There is a closure below this level. A lot of people see this as what? A break of structure. But then here we have no break of structure on the other pair. What does that mean? That means that this breaker structure is not real. And that's the importance of SMT divergence. So SMT divergence, in short, the importance and the significance of it is that it tells me which breaker structure is valid and which breaker structure is real and which one is not valid. It also tells me which market structure shift is valid and which one is not. So for example, if we're looking at a market structure shift and we want to validate that one, so let's say price is taking that low, breaking above this high, but then on the other pair, we have something like this. We did not take that high. That's an SMT, and it's also telling me that this market structure shift is not valid. That's the importance of SMT. It's not just, going over the definition and telling people, oh, it's a Kraken correlation and you got to use it. No, we got to understand why it happens, what is the importance of it, because if we have 3 correlated pairs, right? And we're looking at the 4-hour time frame. In order to validate a breaker structure, we need to see all 3 pairs, because if they are correlated, they all should closing below that level. And we should see a breaker structure in both or 3 pairs. But if we see 2 pairs actually not taking that low, and we have only on 1 pair, it's taking that low, what does it tell me? That usually this is a reversal point and it's not a real breaker structure. And this one is just going to go up, and there's going to be a, instead of a breaker structure, there's going to be only a liquidity sweep. So in short, SMT gives you an indication that a breaker structure, market structure shift is not valid, but it's nothing but a liquidity sweep. SMT happens at reversal points. So you see where we had this fake breaker structure, that's a reversal point in the future, and it's going to go like this. SMT also happens at the start and end of market makers models, and also all trends. So we have this swing high, the swing low, when taking a look at this on the lower time frame, there's an SMT here and an SMT here most of the time. And also in market makers model, if you watch my full course about market makers model, we discuss how to find that smart money reversal. And one of the confluences we look for is what? SMT. So when we have that POI, we're going to look for that SMT in order to validate that as a smart money reversal. And finally, as we discussed, SMT tells you which breaker structure is real and which breaker structure is false. So that's the importance of SMT divergence. If you see all pairs taking that low and displacing below, then most likely it's a real breaker structure. If you see one pair is taking the low, the other one is not, then most likely this is a liquidity sweep. Now it could follow, right? This one could take this low, then maybe go up a little bit and go lower. And this one would be doing this, taking the low later. That's not an SMT no more. And that's what we're going to discuss later in order how to validate the SMT. Is it really at that time when it's happening? So let's say we have this low taken while this low not taken at this specific time. Then does that mean this is an SMT? It could be, but it could be not. It could be this swing taking the low again here, and we could move lower here. So that's what we're going to discuss later. Now, there is a big relationship between SMT and turtle soup. So if you really want to master turtle soups, then you're going to look at SMTs. And that's how you actually make it and master turtle soup. So why is it related to each other? Because if we actually have a breaker structure in one pair and then no breaker structure in another pair, what does it tell you? It tells you that there is a turtle soup most likely. It tells me that there is an SMT which lead to a turtle soup. So breaker structure in one pair and no breaker structure on a correlated pair, it's telling me that one pair is sweeping liquidity and another creating a failure swing. So that's not a breaker structure, a real one, but it's actually a liquidity sweep. The other one did not take that low and create a failure swings. It tells me that there's no real breaker structure, which leads to what? A high probability turtle soup on the pair that took the low. That's how you find high probability turtle soup and how to find high probability reversal points. So if you want to master turtle soups, then you gotta understand SMT the way that I explained. So when looking at SMT, we could look at it in two different ways. And that's my understanding of SMT. So I've never seen someone explain SMTs. So I've never seen someone explain SMT in this way because this is my understanding of SMT. We could look at SMT in two different ways, external and internal. And that's the same thing or the same point of view that we look at liquidity. We look at liquidity as external and as internal, right? So when it comes to SMT, the external way, we have price coming lower, and we have a higher time frame PDR base. So let's say we have a low on the higher time frame here. We have a POI below it or a fair value gap. Price takes that low in one pair and it doesn't take on another pair. That for me is an external SMT. It's price taking an external liquidity, usually a level on the higher time frame. So if you look at two time frames here, higher time frame 1 and then a lower time frame 1, this is going to be your higher time frame sweeps. And then we could look at the lower time frame and we're going to have an SMT here, which is going to be what? The internal SMT. So internal SMT is after price takes the external liquidity, it takes an internal liquidity, and usually that's a level on the lower time frame. So now we have the external liquidity, and that could be a model by itself, right? So you could trade this if you have understanding of period rates. You pick one, you look for two SMTs, one external and one internal. That's a valid and that's actually a high probability trading model, right? The internal here would be what? Price is going lower. This is the first pair, which is taking this low into this fair value gap, while the other one creating those failure swings inside of the fair value gap. That's what? That's an SMT. And again, we got to look for the SMT in point of interest. You see, SMT in a POI and SMT in a POI. We don't look for SMT anywhere in here or here or here, only invalid POIs. So again, understanding external, internal, and the two different types of SMTs can lead you to creating a very high probability model. I could make a video about this, an SMT based model, right? We look at video raise, liquidity levels, and we look for two double SMTs, external and internal, and we go off from there. A question that you might have, which pair to trade when have SMT? Because I could see EU, for example, is not taking the liquidity. GU is taking the liquidity. which one can I trade? The short answer is both. If you're into trading liquidity sweeps, then you can trade the weaker pair, the one that takes the low, the one that does not respect the PD arrays. If you're into trading OTE or fair value gaps, then you gotta look at the pair that was respecting the PD arrays. You gotta trade this one. In general, you could trade both, but the one that's gonna be faster and the one that's gonna have that explosive moves and the one that's gonna be cleanest is usually the one that is stronger. That's a fact. Go to the chart, compare two pairs, for example, EU and GU, look for an SMT, and that's your homework. Look for an SMT, right? Spot it. Look for which one is stronger, which one is weaker. And you're gonna see that the weaker actually doesn't move as much as the stronger one. It's not as explosive as the stronger one. And you're gonna see that the stronger one is gonna be much cleaner. Price respecting a fair value gap, respecting the order flow here, and it just keeps going up. While this one might be choppy here. But then there is an advantage of trading this one because even though it's not that safe, but you know where to put your stop loss. It's below this low. Now here you could have a very tight stop loss if you trade delta soups. On the other hand, if you're looking at EU in this example, you don't know where to put your stop loss. It could be somewhere in here or below the low if you're entering on here. Now price could do another sweep and that's gonna be the internal one, right? But it's gonna be more obvious in the weaker pair where to put your stop loss, while it's gonna be harder here and it's not gonna be as tight as this one, but this one is gonna be much cleaner in the future and it's gonna have those explosive moves because it's much stronger than the other one, which is the weaker one. Now we're gonna go over examples. We're gonna put it all together and we're gonna discuss everything from internal, external SMTs. We're gonna go and look for trade ideas using SMTs and how to execute based on those. We're gonna look for the weaker and the stronger pair. We're gonna discuss all of this in the examples. So that's where everything is gonna be clear to you. Now looking at the current price action of your dollar. So both of those are positively correlated. And we're gonna go over just how to spot SMTs and how they actually create those reversal points. Very precise, okay? So now we're looking at EU and GU, right? So just starting from here, we can see that, okay, price was going up here. There was CPI yesterday. It was going up. We started going lower. We're going up. But before that, there was a trade that I was able to execute here. And what we have is, because I do trade sessions highs and lows a lot based on turtle soup. So we have the yellow one is the London kill zone. The red one is the New York and the blue one is the Asian session. Now taking a look at this, we have this London low, right? If we zoom in here, what we can see is that we have this London low taken on the euro dollar, and regardless of the weaker and the stronger in this case, because I do trade the weaker one, because I do trade turtle soup mostly. What we had is price on New York taking the London low, but on GU we were not taking that one. And I want you to see how from that point, and when this happened, you could look at it on the lower time frame, right? And it's going to be more clear because I was looking at it on the 15 minutes. But just because I want to show you how to spot those SMTs, right, at those very key levels, which are sessions highs and lows. Now we have this London low, right? The same time when we do an SMT, when we're looking for SMTs, it's gonna be a low that is happening at the same time on the other correlated pair. But what happened here is what? We have price not taking this low, but actually reacting off a fair value gap here. Then that's a much cleaner on GU. That's a very clean SMT, and price respecting this bullish PD array, which is the fair value gap going up. Do you see? We have this one, we have this one, and we're looking at how much the move was. Take a look at this. From this point, when GU started going up, right, from here all the way up, that's almost 97 pips. On EU, it's only 72. So the cleanest one or the stronger one is going to have those big moves much more. So you see, for example, this candle, you see how big the GU candle is compared to the EU, and it happens a lot, right? So this is one SMT that we spotted yesterday. We traded based on. Now it happens a lot, especially in these sessions highs and lows. So when looking at this example here, what we see is this Asian high, which is right here, it was taken on GU while actually not taken on EU. And that's one of the reasons that there's some liquidity levels that when you're looking at, you were waiting for those liquidity levels to be taken, but then price just leaves without you. What's the reason? SMT. So you see, EU moved all the way there. GU also moved here, but GU moved much more with more aggressiveness, even though it was the weaker pair. So it's not always the situation here. But what happened after? Price started going lower, so that was a reversal point, right? We started going lower. What happened after is this. We had this low, which is the London low, not taken on GU. So here we have GU being the stronger, while in EU we have London low taken by this move on the New York low. So we have already an SMT here, and that's what? A reversal point. And this is in a higher time frame PD array. Price took that low, started going higher. Now, when I see this, when I see price actually going below this point while not going below this, and price respecting the rejection block, and that's one of the reasons that also rejection blocks are respected. Now, when I see this, I would know that actually this is not a real breaker structure because the other correlated pairs did not go below this low and did not displace, did not even take that low. So that's an indication that this is not a real breaker structure and we're actually pushing higher. That's an SMT. That's what happened here. Now, just taking a look at those sessions highs and lows, right? We're not looking at anything else. What happened on this day, for example? So we had this London high not taken on GU, but then on EU, we have this London high taken here. So when I see this, the moment that I see this, let me zoom in. The moment that I see this, price taken London high in one pair and not taking it on the other pair, you see, not taking it, then I would know that actually we could have looked at this one also. It's the same. Now, when I see this, I would know that most likely price is going to go lower. And that's what happened here. You see, price moving very aggressively here and price respecting this rejection block here. Mostly in the higher time frame is going to be more obvious. But then we started going lower. There is no SMT here, but we could look at it in another way. So this low also taken here, in both. We could also look at it in another way, right? So for example, the 15 minutes, that's going to be a valid low, which is this one or this one. And you see, it was not even taken on GU, but all of those lows were actually taken on EU. So you have this one or this one. Now we're looking at the bullish SMT. If we have one, you see this low on GU on the 15 minutes, that's going to be a valid swing low, right? And you see, it's not taken on GU while actually it's taken on EU. What does this tell me? It's telling me that there is an SMT that's not a valid breaker structure. That's a liquidity sweep, mostly in the low time frame, and we're going up. And that's what happened. This happened all the time. All the time you're gonna see this. And that's how you spot those reversal points. Now, one example about the double SMT or the external and internal SMT at the same time, that's gonna be such a a very high probability model. What we can see on the 1 hour, and we discussed that we want to look at an SMT on the higher time frame, which is going to be most likely the external one, and then a lower time frame one, which is going to be the internal one. So what we see here is that we're taking a high here, Asian high being taken by New York, and on EU we did take that high. On GU on the other hand, that's the high. We did not take it. So we're just going inside of this OB that was created on the Asian session. What we're going to do is go to 50 minutes or 5 minutes, wherever the cleaner it is. And we're going to look for an internal one. With that internal one, we're going to confirm that we actually have a valid setup because we already have the first sign of reversal, which is the external one. In order to enter, on the other hand, we're going to use the internal one inside of here and we're going to look for an entry. Now on the 5 minutes, this is what we see. Asian high being taken on New York, not taken on GU. We're going to zoom in to the price action here. And what we see is that on GU, we started going lower. We created a fair value gap. That's the first thing to notice. We did not create a fair value gap on EU. So you see the cleaner one or the stronger one here is GU because it's respecting the PD arrays. And you see it's much cleaner on the lower time frame. That's the difference between the weaker and the stronger. The stronger here is much cleaner. You could have actually taken this trade here because this is the one that was respecting the PD arrays. A trade here, another one here. That's without looking at SMT, just knowing that you have an SMT that is external, right? Now, when talking about the internal one, we see no fair value gaps here, nothing. And then we created a fair value gap on EU. What happened here? This is the entry that it could be looking for, and this is the valid SMT. So you see, we created a swing high here on GU, and at this swing high, we actually have this high right here. So when comparing this high on GU is aligning with this high on EU. The high was taken here, the high was not taken here, aligning with this one. So there was a clear SMT that is happening between the two here. What happened is GU respected this FVG here, while EU decided to take the high again. So what we have is externally EU is weaker, and also internally EU is also weaker, and GU is externally and internally stronger. So it's much better to trade GU unless you look for sweeps, right? So if you look for a sweep here, enter based on the sweep, that's gonna be a valid entry, right? Something like this, and then going lower. But on the other hand, if you look for GU on this case, and you look for this, mitigation first, waited for the other one, entered based on this mitigation in this rejection candle to close above, this candle high, then that's going to be much cleaner. It's going to be much cleaner to actually look for GU. Look how GU is respecting everything, and it was going lower faster than EU. Why? Because it's the stronger pair. It's the one that is cleanest. It's the one that was respecting PD arrays from the beginning. Now, another example that I also took an entry based on, and again, it's about internal and external SMTs. So what we had here is this London low at 2 a.m. London kill zone being taken on EU, while on GU, this is the London low, the same one. It was not taken here, right? At the same swings. So this tells me that, okay, we have an external SMT in this case, where EU did take the low and GU did not. GU obviously is the strongest pair, EU is the weakest. Let's see on the lower time frame on the 5 minutes what we see here, or in the 15 minutes if it was cleaner. So on the 5 minutes, because it was cleaner than the 15 minutes in this case, because we had news, we had a lot of high impact here. Now this is, let's say this is the lowest point on GU, aligns with this one. We're gonna take it from here to here because we're gonna refine it more. This is the lowest point on EU, which align with this one. So that's the SMT that we had refined on the 5 minutes. Now take a look. We had the SMT, we started going up, pushing up here. We did not execute this one. That just the first confirmation, right? Unless you're only trading on one time frame, then yeah, you could do that. This is the first confirmation. We started going up. What happened here is creating of two fair value gaps, one breakaway gap and the other one here was filled fully on EU. You see, filled here, while also this fair value gap was filled fully in here. So it was not fully filled here, but after, yeah. But at this point, it was fully filled on GU, while not fully filled on EU. What happened after is this is, you see, if you look at this on EU right now, we had this low, did not fill the whole fair value gap and was swept later. There was a sweep and we actually closed above with a rejection. What happened on the other hand on GU, we did not sweep that low. So that's an internal SMT confirming the external SMT that we had and confirming an entry at this point. We close above. Now, internally and externally, GU is much cleaner here. So you could have traded the GU here after this rejection and after respecting and after looking at this and seeing the rejection on GU, put it just below the fair value gap. That's a breakaway gap. And take an entry based on this. So 3 to 1, easily achieved. And you see, we're going up aggressively after. When looking at EU, you could have taken a risky entry here at this candle, the rejection. Or you could have waited for this one, but after this one, it's like the train has already left you alone, right? So you could have not traded based on this. You should have traded or took a risky entry based on this. So you see, even when it comes to the trading opportunities, the stronger one will be most likely the cleaner one, okay? So you see, a very clean trade here going up. It happens over and over. This is a whole trading model that we might actually backtest one day, right? If you wanted, then drop a comment, say, okay, Moham, do a backtesting about this. Could have go look for an external SMT and then followed by an internal SMT and trade from there. So I think we had enough examples of SMTs, but I just want to show you the importance of SMT in order to spot a reversal. You see, at those points, we had SMT, and you see, that's the reversal. when we had an SMT, that's the reversal point. And I just took about 2 minutes in order to go over EU and GU, both of those, and I did not even look at DXY, right? Because we could have an SMT with DXY also. But this is only taking a look at between EU and GU. That's an SMT, that's what? A reversal point right here. The same thing going where? Exactly right here. That's a reversal point where it could have, taken advantage of this and executed a trade. Also here, as a very important point to take advantage of, right? So you see those points where the SMT happens, it's an indication of a reversal point. This is the end of the video. If you guys have any question about SMTs, drop it in the comment. I'll be happy to answer those questions. I hope that I've done a good job explaining this in the easiest way and giving you some secrets and gems about SMTs. If you like this type of content, then make sure to hit the like button, subscribe to the channel, and share this video with your friends. This is Molham, and I'll see you next video.